what makes trading hard is nothing's ever the same. All these variables differ. It rhymes, but it's not the same thing. And I'd be able to just make all these analogies and say, oh, ABC, this sell-off is just like XYZ 3 weeks ago, or ABC is just like DEF 8 months ago.
Yep.
And I would, in no way do I have a photographic memory. I don't even think I have an above average memory. But what would happen, and the people around me would be like, holy shit, I can't believe you remember this stuff.
Yeah.
It's not because I have a good memory. It's because I was just imprinting this stuff in my brain by doing the detailed write-ups, by reviewing the videos. And so then in real time, you start to piece it all together. You know, if you're Tom Brady and okay, this player's moving here, like the defense is kind of making these tweaks. I think they're going to blitz. You're able to read those little nuances because of all that time you've done. And in the same way, it's like, okay, wait, I recognize this play. This is how I think it's going to pan out. And you don't have 100% certainty, but you know your odds. And once I was able to replicate those using trading, that's when things started to play.
You know, there's so many things I want to dive into, but one of the things is I really want to know what was Sam doing through that time. Because you talk to him, I'm assuming every day, right?
Yep.
And so, during that time, and you start to learn meta learning, two questions. The first one is, let's pick on the first one. Was he giving you any advice, or, was he telling you anything when you were losing every day? What was he telling you through that time?
Yep. So I think he was an incredible trader, but I think teaching is a very different skill set, right?
Yes.
The best practitioners aren't necessarily the best teachers, and not that he was a bad teacher by any means, but I think people learn in different ways, and so I think for him to have this open book, ask me anything, I'm available. It was effectively just super close mentorship, right? It's just the couple of us every single day, and so he found it extremely frustrating.
Oh yeah.
Extremely frustrating. He was in no means entertained. There were many miserable months. We're not talking hey, Lance, today you're an idiot, but it's all there was months of you guys are not on the track to make it, and he definitely meant well. He cared, right? He cared, but I don't think he had, as many people want to have, the tools to just be oh wait, this isn't productive. What this guy needs is this. And I think that's what I've learned a lot. Not that I was some perfect trainer either later on. I had to learn, there's this very fine line of being too emotionally invested and too frustrated, and you really need to just help people focus on the process and find their path of what works for them. So it was, I guess the best way is he cared and he did his best, but it ultimately came out as extreme levels of frustration and, hey man, you're not going to have a job too much longer.
Yeah,
it was trial by fire, and it was it was that wake. There was no bullshitting. It was that moment of hey Lance, this the only reason, Trillium does a good job of giving you a long leash if you're struggling, because they know it's a long learning curve. We generally say it's a 2-year learning curve, right? And so they gave that long path. But I think the other thing that's important and really worth touching on is to some degree, I wouldn't say that I was, realistically, I don't think anyone would have ever fired me, because, and this is important to everyone in every job in every stage of their life, because I was adding so much value to that group. We were operating, as everyone's, of course, trading their own book, making their own trading decisions, but we still helped each other out as a team, right? And so I was, between calling out different stocks, between calling news, between reading news articles, between doing studies to find more edge, I was putting in so much work and helping the group. So it's if my salary is $26,000 a year, it's I'm on some days I'm making these guys $20,000 in a day, So it's why would you ever fire this set of eyes? This it's an intelligent set of eyes that knows what we're looking for and conceptually is getting this stuff. And so it was important to me. I knew, if this guy's gonna keep me around, I sure as hell better add value. And that's true for any job, right? And people don't think about that. You need to add value in excess to this. And people are always in the trading community, how do I find a mentor? How do I find a mentor? And I've been going big on that. And it's guys, the question is, why should anyone mentor you? what are you doing for them? And they're like, oh, there's no way I can add value. Well, then guess what? That's why you don't have a mentor.
Yeah.
You know? And they're like, oh, but how do I add value? And I'm like, guess what? You're not putting the time in to figure that out. So what do you expect, dude? That's why you're just you know,
Yep.
just treading water there. And it's like, first of all, you need to find someone that's close enough in experience, just a level or two above you, so that you can offer them value, right? And then there's no just playbook for this. No one's going to give you the page, just do X, Y, and Z. You got to figure that out. And people don't want to do the hard work. People don't want to reflect and say, oh, what value can I do to help people want to invest in me?
Yep.
Right? And then to do it selflessly, right? So many people, they don't want to share their daily report card with other traders. They don't want to share their edge. They don't want to share their strategies. But those same people then say, why doesn't X, Y, and Z, one level above, two level above, not want to help me?
Yep.
It's like, dude, because you need to proactively give them value. And I knew that with my group, right? And even in prop trading in general, I think trading in general, because we think, oh, we're this one-man island, we're independent. People way underestimate, like, the power of networks, the power of giving values to other, and how it comes back to you. And that is what kept me alive, right? Like,
Yeah.
because I really struggled close to 2 years. And really what was so big of a deal was that I knew, like, I mean, I was still scared, right? Like, eventually I had to interview other places just because it was like, wow, this is real. I might not make it. I'm struggling that bad.
Yeah.
But I also knew, like, man, like, I'm making these guys a lot of money at the same time. Not myself yet, but I'm conceptually getting this. And so there was one time even when I was starting an interview, and I spoke with the number 2 guy in the group, and I told him, like, hey man, just between us, like, what do you think? Like, do you think I have a shot at this? Like, you know, I might have to leave at some point. Like, I've got student loans. I've got, you know, a quality of life above 26 grand,
Yeah.
you know, that I'd like to live one day. And he pretty much said, like, look, like, I can tell you conceptually understand this stuff. I think you really got to stick with it. Like, what you're doing for the group adds value to us. And, like, if you piece it together for yourself, it's going to make sense.
Look, man, I want to ask you some questions about some of these things you have over here. So you mind if we take a walk over there?
Let's
real
do
quick?
it.
All right, great. So, you know, you mentioned something earlier, too, about meta learning, right?
Yep.
And when you were talking about before, though, is how they were very fast. Their style of trading was very fast, and it wasn't really meshing well with you. And then you took into meta learning to help you improve on that. Did you actually completely, like, learn how to trade fast then through meta learning, or did you kind of evolve what you learned into your own, like, could you explain that? Like, how were you able to, like, make that transition?
Yep. So the reality is, I think some of the most edge happens on the shortest time frames. And so just from observing, I'm like, damn, I need to get good at this. And there's no way to really prove or disprove something too well, but I like to think I was probably one of the fastest traders out there in the world. Because you would see some of these order flow inefficiencies in some of these headlines, then you can equate that with, okay, if there's some order flow inefficiency for 100,000 shares, and I get 80,000 of them, right? And if you see, you know, there's only so many of these moves each week, and you're getting 60-70% of the volume on them, then you're like, okay, there's nobody else out there doing this stuff. And we're just talking about trades that might elapse in under 2 seconds, under a second, you know, stuff where some offer comes low, you get that guy, and boom, you're able to kick it out immediately, like stuff like that. And the way I worked on that speed was just, again, through so many reps, right? So I'd have my highlight reel, and when you're brand new, right, it's imagine seeing, if you're Tom Brady, day one, trying to watch that play lapse, it's holy crap, there's all these things happening, it's just overwhelming. All these details go over your head, right?
Yeah.
So what you do is you take that highlight reel video and you slow it down. And you watch it at, call it 0.75 speed or something. And you watch it a couple times and you see all these little nuances. And you see, okay, this was the intraday chart, this was the daily chart, this is what the box is doing. All the little nuances, boom, that's what that turn looked like. That's what that turn looked like, or that's what that order flow move looked like. And what you do is then you just rep this. And once you've seen it at 0.75, you go to normal speed. But guess what? The real trick is not just normal speed. It's if you can trade even faster than that, everything else. You know how when you're swinging a bat in, like, Little League, where you have, like, the little donut on, the little donut weight, and you kick off the donut weight, and you're like, oh my God, I'm the strongest, fastest bat speed in the world. So what that is you're watching those videos at 1.25x or 1.5x, and you're processing all these things so much faster. So then when you watch back at 1 time speed, you're like, holy shit, this is so slow. This is like, you know, it's like, it's so much more intentional. And so then when you're actually trading at obviously 1x speed, you're able to just process these things so much faster. And so these moves would happen, right? And with some of these inefficiencies, you got to be scared. Like, is there news out? Is there not news? Is this even a price I want? Is there something I should be scared of? Like, how good are these prints? How much size do I want on these prints? And so I'm sure I would definitely say I was super, super slow. But on some of this stuff, like, I was definitely one of the fastest out there. Not because that's how my brain worked. My brain's the opposite of that.
Yeah.
But you just train yourself so much. And like the analogy I always give is like, imagine that first time you drove a car, right? Like 16-year-old you driving a car, like all you can focus on is like right foot gas and hope you don't hit an old lady in front of you or something, right?
Yep.
But now you've done so many thousands of hours probably behind the wheel that it's you can talk on the phone, you can do whatever while eating a cheeseburger and still turn while like driving with your feet or something, right?
Yep.
And because your brain learned to process all that, and that's just like what trading is, right? You're able to get all this pattern recognition where you know, oh man, if I'm on the highway and there's some asshole speeding up on the right side of me, this guy's probably going to overtake me, then go in front of me in the fast lane and go, right? That's pattern recognition, and stocks are no different. You can say, you know, we're starting to sell off, market's really flushing out, maybe we're really going to have that panic, and when it does, what are the nuances I want to recognize when it happens? When a really good bounce happens, what are those variables? When a really bad bounce happens and we're not working, what do those variables look like? And you just watch it again and again, and you systemize and write all these things down and really process it.
So you were basically doing this every single Sunday, so you record everything, and then on Sundays you watch everything.
So even better, right,
fast.
is during the week, I was working a full weekday, right? So, I mean, pretty much I'd get in there early.
Yep.
Not necessarily that early, but do the full trading day. And, like, what people don't recognize is all the improvement, the real improvement doesn't happen during the trading day, right? Like, if you're a basketball player, you get a little bit better from the game, but where you really get better is doing the drills, you know, shooting your free throws, all the practices you do, watching the tape of the game. That's where you really, really make the improvement, right?
Yep.
And same with the trading. Like during the day, you're kind of just executing. Where the real learning comes from is all after hours for me, right?
Yep.
So I do my detailed trade write-ups. I would do all my Evernotes. I would do all my reading about the news stories. I would do creating these highlight reels. Then especially on Sunday, I would do a full review of the week, every single Sunday. But during the week, I was still working till 7, 8 p.m., right? And I'd hit the gym, I'd eat dinner, but I was getting all my hours in.
And you know, it's crazy. Like we're standing here, and you have all of these, just Trader of the Year, great year 2021. You have this 2019. Congratulations on a great year from Trillium. All these awards, man.
Yeah, they go back a lot of years.
It's insane. So it's amazing that you have all these, but people will see this, people will hear this, and I want you to just share just like what helped you get here. Like, because I know you talked about off camera a little bit about like failure and how important that is for you to talk about. So can you hit on that a little bit?
Yeah. And I mean, I think the question's always like, should you be emotional as a trader? And people think, oh, the best traders have no emotions. And I'm not. I think there's a lot of generalities you can make that just aren't necessarily true. Because I've known traders that are very even-keeled. And my trainer, who was great, was the opposite of even-keeled. And I think as the world advances on just skill kind of progression and stuff like that, my current beliefs for now are like, you want to fully believe in the process and trust in that rather than focus on the outcome. But at the same time, emotions can be used maladaptively or adaptively. So here's the thing, right?
Okay.
Is if I'm negative on the day, say I lose $500, and I'm pissed off, I'm furious, I'm slamming my desk, I say, F this, like, trading sucks, I hate all this, I suck, you suck, everyone sucks, the whole world sucks, I'm gonna go drink at the bar.
Yeah.
That is a maladaptive emotional reaction, right? But you can also have an adaptive emotional reaction. So what if I say, like, damn it, like, I suck, I at least suck right now because I lost money. I didn't do the right things. I didn't make the right decisions. I want to be better. I am angry. I am pissed off. I am hungry for better.
Yep.
I am not okay. I am not okay with failure. I am not okay not being my best trader. I am not okay with any of this. Nothing makes me more driven and more hungry to succeed than feeling these emotions. As a result of that, I'm going to stay here and I'm going to review and I'm going to find new solutions and new ways so that I never make this mistake ever again. That is an adaptive emotion, right?
Yep.
You're using a negative emotion to fuel positive change. And I think that's where these generalities get it all wrong. Like, it's totally fine to have those emotions. And so when I was struggling, I think what really, really separated me from most people is I would emotionally feel that pain of failure so strongly. Like, the thought of me going out and grabbing dinner with a friend on a bad day, like, I just can't even grasp that. All I would be able to think about is I never want to feel this way again. Those emotions were so powerful. Like, I don't want to see that guy do better than me. I don't want to see that guy do better than me. I don't want to see anybody doing better than me. I never, ever, ever want to feel what it's like to fail.
Yeah.
And I would do that just to drive me. What gets when it's cold out or dark out or shitty out, like, what gets you to go in on a Sunday morning? What gets you to stay late? What gets you to hit the gym? And you need those intrinsic kind of motivational factors. You need those emotions to say, I'm hungry for this and I'm willing to pay this price. You know, and it's easy to say, but hard to actually do that consistently over time.
Do you feel like, because I know you help a lot of traders and a lot of professional traders on a regular basis, do you feel like, touching on the same fact that you said there's a lot of generalities that are maybe not really true, is there some other things that people say that really are hurting traders and the masses, like they hear all the time? You know what I'm saying?
Man.
Like common sayings, like, you know, I don't know. Like,
Yeah, there's so many common sayings out there that people won't just, I don't know, just objectively assess for being
Yeah.
true or not. And there's some that are true.
Yeah.
And there's some that are just dead wrong, and people refuse to just take. And here's the thing, if you can't be bothered to objectively, like, analyze these things for the kernel of truth, like, there will be people that's, like, the common saying, you can never go broke taking a profit.
Yes.
Well, guess what? Here's the thing, is if you take your profit every time you're 10 cents on the money, but every time you're wrong, you lose $1.50, and, you know, you're wrong, you know, say you're right 4 out of 5 times, but if you're only making those 10 cents, and if you're ringing the register and not letting that trade work, guess what?
Yep.
You can go broke taking the profit because it's not going to work every time, right? And, like, if you're cutting off your expected value, imagine, and I love the poker analogies, imagine getting aces, and every single time you bet some amount just to get the blinds, right? You scare off every single person every time you have aces. And you're like, you know, can't ever go broke, can't ever lose, you know, maximizing that hand. It's like, dude, you just got the bare minimum on the best hand. You didn't juice that at all, right?
Yeah.
And so if something really good happens and you're always just got to take some off, where, like, people have the thing there, it's like, I love to get the free trade or whatever, where it's like, okay, my risk was $5,000 bucks. Once I'm 5K, I'll take it off. But it's like, if you're taking off, when there's still massive positive expected value, that is a fundamentally just incorrect move, right? And, like, look, that doesn't mean people can't succeed doing that. People will always kind of like chirp on Twitter and be like, but so-and-so does it this way. And, like, look, there's many ways to skin a cat, but there's still the objective mathematical truth. And if you're selling where there's massive positive expected value because you want to cover your risk, well, I mean, that's one way to do it. You're not going to lose as much. You're going to get a free roll on the rest. But you're also cutting off so much of your winners, and you're not going to be maximizing your P&L, right? And I think so many people make those logical fallacies, and what I did really good about is, like, figuring out what's the kernel of truth in this. Like, is it true that I should be taking off and covering my risk, or is that actually going to, like, what if I take off at 30 cents when I'm about to make $3? If you do that every time, you're ruining yourself, right?
Yeah, 100%.
And, like, you're lowering your variance. You're going to have less negative trades,
right?
But your P&L is going to be a fraction of what it should be, and people don't test these things.
So, like, speaking of that, because the whole idea of, like, they don't want to have losses, right? So, do you feel like, I don't know how to word this, so help me out here, maybe you'll be able to pick it up, but, like, I talk to so many traders, right? And I'm working on it every single day. I want to get to where you guys are at one day, right?
Yep.
But what I've started to notice, like everyone trades different. Like you mentioned it, Jack Schwager's books, it all mentions that. Everyone knows that. Would you say like the fundamental like denominating like fact that you need, and if you can elaborate, if you do believe this, is like, and if you don't, I'd love to hear your thoughts, is like risk management. And like every trader trades differently per se, but like how they view risk and how they manage it is probably what makes them consistent. Would that be more factual than actual setups itself? You know what I'm saying? Like risk management is probably more important than the setup.
So Bella and I talk about this all the time,
Okay,
right?
cool.
And this is because people overemphasize more than risk management. People overemphasize psychology, and not that psychology isn't important, but ultimately there's the most important thing to even get anywhere. You need a system with edge, right? You can have the best risk management in the world, right? So maybe my risk management is I always take off at the right stop, right? I never lose more than I'm supposed to. I always follow my limits. If you have good risk management, but you're playing a system with negative expected value, bro, you have a 0% chance of winning in the long run. Literally zero. Like, again, people will disagree, but it's an objective mathematical fact. If you're playing a negative expected value system, like think about it. I can tell you I'm going to go to Vegas, when we were in Vegas. I can tell you I've got this little blackjack system, so obviously I've got negative EV in Vegas, but I can tell you I'm never going to lose more than $500 a day. I can tell you on the big trades I'm going to bet 200 and this and that, and I can have this perfect system for risk management.
Yep.
I can follow it to a T, but if I'm playing blackjack in Vegas, it doesn't matter. I'm going to lose money in the long run, right? So I would disagree with that. That's not to say it isn't important, right?
Okay, gotcha.
But ultimately, what so many traders say as poor risk management or poor discipline or poor willpower or poor overtrading, ultimately, you just don't have edge.
Yes.
And so many people, you need a system with edge, right? And you can, so here's the real test. Can you have a system with edge, but poor risk management and still succeed? Absolutely. Yeah, like in some worlds you might blow up, absolutely. But there's some people that are at least going to do well and at least over like a decent time frame, right?
Yes.
And like, yeah, maybe you have an outsized loss, but if you have enormous edge, so now think about this, right? Let's say I have a 99% chance of winning, and when I win, I'm gonna make 100x what I lose. Incredible, insane edge. People would
Right.
take that bet all day. I can have shitty risk management, and let's say I say I'm never gonna bet more than 500. If I bet 5,000, 2,000, 10,000, I can do that and still probably never blow up within reason because I have so much edge,
Yep.
right?
100%.
And so even with my trainer, he didn't have the best risk management, but he still was phenomenally successful. And for most of my career, I didn't have the best risk management either. And I was still putting in top 10 finishes, even with poor risk management, because my system had so much edge. But it can't work the opposite way, right? And
Yeah.
so people way underestimate, do you actually have a system that works? If not, forget psychology. Stop reading psychology trading books. Stop reading all this crap. You need to find a system with edge, or everything else is useless. You will not have a single chance. And that's not true for any other thing, right?
Yeah, I love that you said that. And if you don't mind, I'd love to see, where you work at every day. You mind if we go
Sure,
over
let's
there?
do it.
Yeah, absolutely. All right, so I really wanted to see your setup over here because you hear all these traders, especially on social media. I mean, how social media is. Like you'll hear social traders saying like, "Show me your show me your desk, your setup." Like, do you feel like it's super important? And I know this is kind of general, but like that traders have multiple monitors, that like they need all this, or can the trader have some success with just one monitor?
Yeah, I mean, I think going crazy with the monitors and the screen layout and everything, that's something that probably a lot of traders can just use as like, oh, I'm doing all this work that I think is super productive, when in reality, it's not the most effective thing you can do.
Yep.
Like, there's the number of traders with 6 screens and 0 edge is probably, way higher than the number of traders with 1 monitor and a lot of edge. And like, yeah, you do reasonably need room for your charts and everything else, but like, the monitor and screen layout, way less. In the ranking of things, it's down by ground level.
Would you say as a beginner, like, would you mostly just focus on, like, I don't know, when you first started or when you're helping new traders coming up in the prop firms, because I know you help all different levels.
Yep.
Like, let's say more intermediate or amateur level, Is it more important for them maybe, before we wrap this up, to maybe focus on like just one ticker and just focusing on that and just trade that, and instead of trying to focus on like 3, 4, 5 tickers? Like, what would your advice be around that?
So I think there's pure day one where it's like, okay, I don't know what a bid or ask is, where it's like, okay, like, yeah, just type up whatever stock you even know, Apple or something, and sure, we can look at that. But I think as quickly as possible, you want people to start gravitating to in-play stocks. Because the reality is, if there's a universe of 5,000 stocks, I mean, there's probably even more, but 99.9% of tickers are probably noise on any given day, right? Like if I were to type up Sirius or something, let's face it, Sirius probably isn't doing bullshit today, right?
Yeah.
And if you focus or fall in love with a certain ticker that's just not in play, you're just fooling yourself by randomness, right? And so when I work with some of these new traders, a lot of them will say, this is the concept, and they just, let me type up as many tickers that I can just kind of like squint and piece this to. When in reality, you need to just go to the tickers that are in play, because that's where the edge is, and that's where the real patterns, the real volume, the real emotions are. And if you take the absolute best traders, and if you give them crappy tickers, they're never ever going to make a dime. It doesn't matter how good you are. If you don't let me choose my tickers, I will lose not every day, but I would lose half of days, more than half of days. I'd lose 55% of the time. Probably.
So ticker selection is super important.
It's everything. And so even once you know this is a bid, this is an ask, this is like the level 2 book, once you know those basics, you really want to start directing towards people like, why is this in play? Why is this moving? Maybe it's got earnings, maybe it's got fresh news, maybe it's panicking or got an interesting chart pattern. Anything doing abnormal volume, abnormal price action, that's where you got to be. Because otherwise you're just reading tea leaves and you're going to trick yourself. Literally, the Nassim Taleb, fooled by randomness, you're going to be studying, like if they've done studies where you can flip a coin, right? And even though it's 50-50, you might get a lot of heads, you might get a lot of tails. And like people think, look at people, like our brain is trained to fool ourselves into seeing patterns, and you'll say like, look at this uptrend, like, wow, we're so streaky. Then it's like, no, it's just normal distribution of data. And you really got to start figuring out like, okay, this is the broken slot machine, this is doing something abnormal from the market and abnormal from randomness. This I need to at least study to find a chance.
Man, dude, like I absolutely love this, and I appreciate it so much, Lance. And I know people are going to ask questions. They're going to be like, Alex, you need to ask this. Why don't you ask this? So if they have questions for you, they want to find out more about you, can you tell them where they can find you?
So really all my content is based on my Twitter feed of the One Lance B. And then I do, probably each month I release videos through the SMB Capital YouTube channel.
Awesome. Well, look, you need to Check out Lance. Make sure to check him out on Twitter. Check him out on SMB Capital's YouTube because he produces some great content. And again, brother, thank you so much, man.
Absolutely. Thank you.
Thank you so much for being a fan of the show and watching to the end. To give back to you all this month, I actually reach out to Falcon Trading, and we're going to do multiple giveaways this month. Here's what we're doing. We're going to give away a computer. We're going to give away a docking station, which basically turns your laptop into a computer station. A monitor mount that holds multiple monitors. So for those who have the dream of having that massive monitor station, we got you covered. And multiple $100 gift cards to lucky winners. All you have to do, click the link below. It'll show all the details of the prizes and the rules so that you know exactly how to win.
Udemy. No matter how you say it, it's the top online learning destination with thousands of
So he would feel, oh my God, I only have an hour. And then he would force trades that weren't there. So that's a mindset issue, scarcity thinking around time. When he had to pick up the kids from school, again, it would be like, oh my God, I don't have enough time. Again, he would force his trades.
Welcome back everyone. Today I'm sitting down with Mandy Prashanjani. We haven't spoken in a while. Mandy, it's been a long time. We usually do these lives every couple of weeks, usually on YouTube. So I want to ask you some questions about psychology, mindset, things people can learn in terms of becoming better traders by mastering their mindset and their psychology. So let's begin with maybe introduce yourself a little bit, tell people who you are and what you do in the market.
Yeah, so thank you so much for inviting me back, Etienne. It's been a while indeed. And as you can imagine, we all go through daily growth, right? So we always look for new podcasts or new trainers who come on the scene and learn from them. You know, like for example, James Clear's work was, a game changer in the trading industry as well. So you can imagine over the last few years, there has been lots of new insights and learnings. And also with the markets being so interesting and changing. So again, it's going to be an epic conversation on a different level than a few years ago. Yeah, so what I'm doing is I mostly trade the DAX, and when time permits, because of the time difference, I trade the Dow as well, just the opening of the US session, and that's pretty much it. I have been lately involved in a project called the Trading Battle, where you also participated and won, and also you were the host a few times. You did an amazing job. So it has been so interesting and so much fun seeing different traders trading live and then having a chat with them beforehand and after the session, after the battle. Again, so many questions I could ask and get new insights and understandings. And what really makes a difference between the high-performing traders and the traders who are struggling continuously.
Yeah, I really appreciate that. And we had a pretty crazy market the past few days, especially today, the day before that, with some Fed announcement. I want to hear, what are some things that traders struggle with in these times? Is it more they miss out on some moves, or is it more they get too impulsive, or does it depend each person? And then how can we kind of adapt and use that to our advantage?
I found this really interesting because I saw a few people on Twitter with bigger accounts saying, what's the biggest problem you're dealing with in this market? And everybody came back with not cutting my losses, not daring to take the trade because I got burnt before, Martin getting into losing positions. So standard answers, right? What we have been hearing for hundreds of years. Now, I thought, okay, let's look at it from a different perspective. And I asked, what is it that you battle most with these markets from a technical perspective? Etienne, I got two people answering. And that was a real eye-opener for me because what it seems is that traders can articulate their feelings, being in fear and greed and FOMO, but they can't articulate from a technical skill level what the problem is. Now, from my own experience, and thank God I have been through a few of those markets, so this market I was actually acing it since the beginning of 2022, because I have trained it, because I have been there before, because I kind of knew what to expect and how to manage myself, how to manage my positions, the risk management, and how to manage this market. So that was all experience and training, my experience, and then also working tremendously on my mindset, as you know, working on my discipline, doing ice baths, running up the stairs, even though I have a lift, and whatever I can do to train and practice my discipline on a daily level, on a daily scale, I do. And so I'm working on all levels. Now, the biggest challenges I see in the markets when I work with my traders one-on-one, so I forgot to mention that I'm a performance coach, which includes working on the trader's mindset as well as working on the trader's statistics or performance statistics, and then looking at, based on your statistics, where are the greatest areas and probabilities and possibilities for improvement, so that you can become the trader that you never thought possible. Like, you can perform beyond your wildest dreams, because I can tell you this is possible for everyone. I've seen it so many times. Now, the biggest challenges were the massive moves, right? The massive swings, and traders not adjusting their risk management. And I think I saw you talk to someone else about this before, and it would be awesome to get your perspective on that as well, in how to resolve it and how to manage it, technically speaking. Because that's not a mindset problem. Traders say, oh, I have fear and FOMO. Yeah, but your risk management is out of whack, because what happened last year and what worked last year is not working this year. So when we look at the candles, they overlap a lot, right? So just the 1 minute candle, there is rarely an open, higher, close, or an orderly impulse. It's like green candle, red candle, green candle, red candle, daily or 1 minute. It's the same pattern, and that freaks people out. So they need to adjust their risk management and practice that. The second challenge I see for traders is dealing with a lack of liquidity. And the lack of liquidity obviously makes for massive moves. You saw the closing candle of the Dow, sorry, not the closing candle, at 10 to, it's really interesting, sometimes at 3:45, sometimes at 3:50, the algos kick in. And today it was at 3:50, and you really see the change in price behavior. And you could see the first candle at 3:50 when the algos kicked in was, I think, a 100-point candle on the 1 minute. And so these massive moves, it's really hard to manage your stops and manage your risk. Now, for us who can trade on MT4, we can put in small positions. It's easy. But traders who trade on the real futures market, and where one S&P point is $25, that's a killer. Or the Dow is $10. So that's a killer for those guys. The third challenge I see with traders is they have been trained to buy the dip for years and years and years. And now to get that old habit out of their system is really hard. And we see, even I posted, it was like a 3 push down, but the third push wasn't confirmed as yet, right? So we had one flush down, really taking out all the stop losses and then coming right back up and then rallying after FOMC. The setups that worked last year aren't working this year anymore. And that's a new experience for most traders. Now, you and I, who have been through those markets, we know that if a bullish setup fails, that in itself is a bearish trade. And we have trained ourselves to be nimble. We have trained ourselves to go short when the long has failed. So being really flexible. And I think that's another problem that traders are facing. They are not flexible enough, right? They get into a position doesn't work out, and then they get like paralyzed. They get just all stiff, like like an armchair, right? There's nothing moving anymore, and we have to be so flexible and nimble at the moment. Now that again can be trained. And one more challenge that I see with more the longer term traders. So my fixed income trader, who is a phenomenal trader, right, prop trader over in New York, makes 6 figures a month, but he's very seasoned, right? He's like late 50s, and he analyzed the fixed income market correctly, but because last year the nature of the markets, he had to keep trading shorter term trades, and then he missed his entry for the big long term trade. And then when he missed the entry, you could argue, well, why didn't he get back in? Well, because then the risk management is out of whack. You can't just say, well, I missed my entry, now I jump in, because where do you put your stop loss, your money management? And if you trade on that big scale, it's, triple, 10 times harder. So these are only some of the challenges that I see traders facing in these changed market behaviors.
I want to go back to something you said in the very beginning, which is about these daily discipline habits. You mentioned on a daily basis you do these ice bath, and like you do these routines to be disciplined in trading and of course in like other things in life in general. Now, what would you tell someone who says like, I just want to follow my plan, I just need to take the right trades, I don't need the ice bath, I don't need the journaling, it's like a waste of time, I just need to be able to follow my plan now. How do you react to that? What are some things they have to do to be able to get there?
These are just the discipline behaviors I choose because I want to do something that really rocks my boat. I love ice baths. I love coming down through the door from in my apartment building and fighting with myself. Come on, you can take the elevator today. You have been working so hard in the gym, and I'm like, no, you take the stairs. Oh, come on, it's okay. No, you take the stairs. Right, the fight, and then going and take the stairs. I love that. Now, someone else, and that would be for them, they meditate. The challenge of meditating is what helps them to be disciplined. For me, meditation doesn't rock my boat. It bores me, and it's a waste of time for me. Now, when someone is naturally already disciplined, they don't need to do these behavioral reinforcement trainings. I'm not a disciplined person. I grew up as a very free-spirited person, and just doing whatever I felt like. Now, it was great growing up, right? And I had a lot of freedoms, but I never learned to be disciplined, and that really worked against me in my life. Because discipline, is one of the key traits that help people to succeed anywhere in life. Now, you can see the difference between my discipline training and other people's discipline training is that I combine discipline with inspiration. And so my discipline comes from wanting to do this and not forcing me to do things that I really don't want to do. It's still hard to do an ice bath, I can tell you that. So it's still hard running up the stairs, but that is more fun for me. And I want to come from a place of inspiration and motivation, training and practicing to be disciplined in my trading. Why do I want to be disciplined? Because 90% of traders, they don't do that work that I do in terms of, practicing to be disciplined so that they can be disciplined in their trading. And I look at myself, it's very self-indulgent, but who cares? It works for me. Like a hero, right? So I am the 1% who does what is painful because I take my loss. Or I manage myself around risk management. And I take pride in that. So it becomes my inspiration, my motivation for wanting to be disciplined. And that takes us to the conversation around self-image. And so who do I want to be? What lifestyle do I want to live? I want to live the lifestyle of a disciplined person. Why? Because I love it. Now, you will notice I don't show discipline in eating chocolates because I love chocolates. I'm not going to take that away from myself. But I balance it out with other disciplines. Like, I don't eat cakes. I don't like cakes. They don't rock my boat. I don't eat a whole block of chocolate, but, a piece, like, one little row of chocolates. So that is what I would ask then my trader, where in your life are you disciplined that you then can translate into your trading? Or are you ill-disciplined everywhere in your life, and then you're doomed in your trading? So, giving them a reality check and also context reframe, as we call it in coaching, saying, what is it that you really want? Who do you want to be? Is that the kind of person you want to be? A slop in your trading, a trading slop.
One thing I realized over the past 4 years is that it's really hard to change someone's self-image of themselves. Like someone who's been losing the market for many years, it's really hard to get them to kind of flip this around to become winning in trading. Like they could have a couple of winning trades, like a winning run or something, but it's really hard to sustain that for them because they have this bad self-image of they still lose money in the market all the time. How do you kind of flip this around for someone? How do you make the change of having them, first of all, see themselves as good traders, but also them having good results in trading?
I love that question, Etienne, and that's why I think all the navel gazing into, looking at your fears and greed, and that's just a surface level. Even looking at, how do you create losses? Yes, that work needs to be done, but it's not the solution. So, because it's all the core self-image, right? That's where it all starts. And when you work the core, all the other symptoms like fear, greed, etc., they fall away. So how would I start working with a trader? I do that every day with my working traders because I tell you, most traders who come to me, they have these self-image problems. They know how to trade, but it's their self-image that interferes with it. And I used to be like that, to be honest, as well. So I used to have the self-image of I am a trader who can't take her losses. And because I thought this is who I am, it's of course all in the unconscious. Of course, my little ego was doing everything to make me right, and then I didn't take my losses. And so it starts with a conversation where you say, where you listen to your self-talk, and the self-talk around taking loss, I'm just thinking what it used to be for me, because such a long time ago, it would be something like, oh man, here I go again. I'm just watching my loss getting bigger and bigger, and I can't press that mouse button. Now, with that self-talk, I'm just reinforcing what I'm doing. I'm not changing, not challenging me to change to create a new future. It all starts for me, with identifying the self-talk. So, for example, I worked with a trader yesterday. He wouldn't take his profits. So he has the best setups. Like, this guy knows how to pick setups. But then the trade would go up and would go all the way, especially right now with the volatility, all the way back down, take him out. And so we went on Trading Sim yesterday and looked at, I said to him, show me how you trade, because the first time I worked with him. And that exactly happened. I love Trading Sim, by the way. It's the best. And really a shortcut for traders to perform really quickly and learn and practice their skill, especially in the markets that we have right now. The trade, he was up $1,200, so we recreated exactly the environment that he trades on. He was up $1,200, and then he just let it peter out. The trade turned around, and he got out at $25 profit because he had moved the stop loss to break even. And I said to him, what did you say to yourself to justify letting that trade all the way back into break even? And he said, well, I always say to myself, what if I get out now and it was just a little retracement, and then it keeps going all the way up without me, which happened to him many times. And so there was actually a reason why he thought that. It was his experience. And so, but you can see how self-defeating that is. Now, there were two topics for me. Number one, this guy does not know how to distinguish between a reversion, just a retracement, or a reversal. So that was a skill that we need to train and practice with him. Money management, risk management. So if you're $1,200 in profit, have a hard stop. Say, if it goes to $500 profit, I take my money and run, because I need $500 a day in order to be able to live off my trading. And then he said, but then I feel so bad because I could have made $5,000. I said, well, if you could have, you would have. The reason that you didn't tells me that you couldn't have. So now go on Live Market Replay, retrade that, and figure out what it is that you need to learn in order to be the trader that can take the $5,000 profit. So the second part, of course, was his mindset in the self-defeating thought of, what if it goes all the way down and then takes off without me? Why does it even matter? It doesn't, right? So that's scarcity thinking. And now I'm looking at this life experience and look at where in his life does he experience scarcity? Where did he experience a massive loss? A loss of a person, a financial loss. So it turns out that he was a refugee. His family, so when he was little, immigrated to USA, but not by their own choice. They had to leave that country. And so you can see that was a traumatic experience for him. Doesn't need to be, but it was for him. That's then what I work with him to heal and help him change his thinking. So to become really aware of the lies that we are telling ourselves. Because what if it goes, $5,000 without me, and then feeling bad about yourself? So that's the self-image part again. It's a lie. So challenge your thoughts. And the third part, Etienne, I work with is what a lot of traders do is they describe their problems. They say, I am frustrated. I get frustrated because I missed this trade, and then I go on tilt. So that is I am talk, self-image talk. And then I train them to change that, to creating a new future rather than describing the past and the present. It's by the challenge I'm looking to overcome is the habit of martingaling into losing positions. I want to learn how to stop doing that and how to do it differently. So stop martingaling to losing positions, but taking my loss and then looking for a new great entry, because there's always new entries. And so you can see now I transformed the language from describing the past and the present behavior into describing a new future behavior that I want to work into. And you know how our brain works, right? The plasticity of the brain is just epic. Now your brain goes into the Google machine of your brain, into solution focused, right? Finding solutions to that problem. Whereas when you describe, I am a trader who martingales into losers and I can't be successful, then your brain of course keeps going, looking for where are you a loser, where do you repeat that same behavior again, and your ego kicks in and wants to confirm that you're right, and then the unconscious recreating automatic behaviors kick in. So 4 steps basically.
I like to smell my beard after a really good meal. Dude, you don't need to get that personal to get the State Farm personal price plan. It just helps you create an affordable price. Like a good neighbor, State Farm is there. Call or click to get a quote today.
I really love these tests or these profiles that kind of put you into one category, that you are this thing and you cannot ever change it. You just talk about plasticity, so I want to hear what are some things that you can change versus cannot really change in trading, and how do you sort of deal with that?
As you know, I love the disc profile. I also studied Myers-Briggs recently, because Myers-Briggs gives us a lot of other insights. And you're absolutely right. When I ask my traders to do the profiles and send it to me, they're going to meltdown. Oh my God, I'm this kind of person. I will never make it. And then I say, no, this is not who you are. These are the behaviors you have trained yourself and was probably being trained and conditioned when you were growing up to do. So this is the only reason why we did this test, so that we can unearth it. And only if we know what is the behavior that is getting you into trouble, then we can look at changing that behavior. But if you don't know what it is, then you can't change anything. So if you're someone who, for example, high eyes in the disc profile, they're very feeling driven, but they're not really interested in thinking like the high Ds. Now, when I see someone with a high I profile, I don't say to them, oh, you're doomed. I say, right, so we can use your feeling, your kinesthetic superpowers for intuitive trading. I know a lot of traders who trade very intuitive. But what we now add to that is the high D of facts and figures, right? And that's what you're so great at, looking at your statistics, looking at your performance figures, and then finding out where the areas of improvement are. And we can also add the, the ability of the high C's of being very structured and organized in their thinking. Because high I's, because they're so feeling driven, often are unstructured. And they have to learn to be structured. Might not be fun, but well, they need to learn it. And I needed to learn it. And when we worked together, I was always so grateful because you always kept me in check. And I learned so much structure from you. And so just because I didn't learn it doesn't mean that I couldn't learn it. So what is really interesting is, for example, in Myers-Briggs, there is this concept of cognitive stack. Cognitive stack means that depending on how you process information, you have a certain way of processing information. For example, a high I feel first. And in the past, it would be feeling, doing. You can imagine, right? I see a big candle, feel excitement, press that button. Now, what was missing? The thinking part. So, when you do the Myers-Briggs profile and you see your cognitive stack, then you understand the process of your thinking. That is pretty much given. Right? So I can't change that. Whenever I see something, the first reaction is a feeling. That's genetic, I believe. But the part that I can change is to condition myself to not act straight away. Impulsiveness, that's why high I's are prone to impulsiveness. And say, okay, when I have this feeling, what do I need to think? For example, really simple example, we all have been there. We are $100 short of the next round number. Let's say we have $9,900 in profit, just another $100 and we have $10,000. What do? Oh my God, just $100. Then we jump into a trade because it's a feeling. We want this feeling to disappear because it's like feeling, not in flow or whatever it is. Right? It just feels weird being just so close to a round number. Now, when I have this feeling, I know exactly what it feels like. And then I tell myself, no, you know exactly what happens when you do these trades. You end up losing $9,000 instead of making $100. And so this is when the thinking then is being intercepted between feeling and action. So you can still see my first impulse is a feeling, can't change that, but it's now my superpower because now my emotions are my emotional guidance system. They tell me warning, 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 or go, go, go. And that's when you are able to distinguish between intuition and intuition. When intuition is when you just know. Your mind is not trying to convince you. It's a certain specific feeling. And it's just, that's the zone, I call it. Like Mark Douglas, trading the zone, that's the zone for me. But when I have intuition, my mind gives me lots of reasons why I should do something or not do something. That's intuition. So that's just one example of what cannot be changed, what can be changed. And what I also believe cannot be changed is I'm naturally a detail-focused person. You are more of a big picture visionary. How do I know that? You love looking at market structures. I love looking at a candle pattern. That can be trained to a certain extent. I trained myself to add big picture visionary to my processing of data. But my natural go-to, my natural reaction is being detail focused. So that's why I'm awesome at scalping, but I'm really bad at long-term trading. Don't know why I can't, I shouldn't say I can't, if I would train myself hard enough, I'm sure I could become a momentum trend trader. And why would I? It wouldn't rock my boat. I love the fastness, right? That's the high I now. I love the fastness of the markets, of the scalping. So just a few examples, but there's plenty where I think 40% is genetic and 60% of our makeup is trained behavior.
Very interesting, of course. I know it's something that other people can definitely work on. Like if they want to have something different in their trading, they want to have different habits, you can make that work for sure. I want to go back to something you said before, which was about like in my audience, I have people who are like business owners. Maybe they made a lot of money in some areas of their life or with the business, and then they want to get into trading. They have some set of problems. Then there's people who are maybe less fortunate, my audience too, who want to be able to make trading work. They have maybe less money to do it, and they have a tougher time. Like these two kind of people have different issues in trading. I'm sure you've noticed that before. Can we kind of go through both of them, like the people who have more money now, succeeded in life before a little bit more, and want to get into trading, like what do they face? Then we can talk about the other ones who are on the other side after.
Again, it's really interesting, like what kind of people choose to be business people? It's the big picture visionaries, isn't it? The entrepreneurs I'm talking about. And so when we have someone who's a business person, is an entrepreneur, and they start trading candlestick patterns, I'm like, dude, you're in the wrong place here. Not going to work for you, but they don't know that, because how do most of us start out? I don't know if you were the same, but I definitely was like that. I went to the most charismatic educator that I could find and thought they're the real deal, paid them thousands of dollars. And then years later, I found out they were just a marketing machine, but they didn't actually know how to trade. So, so many influences are important that we need to look at in terms of how much life experience do you have in choosing good people. I had no life. I was so naive, right? Hence, I was attracted to the charismatic people and didn't even check what their skill set was, what their results were. I just took it, as face value. Now, and again, that's what I loved about you in the trading battle. You have proven, you have shown that you can trade, because you traded in front of, millions of people. So I can tell you a lot of educators that I contact and asked, would you like to participate in the trading battle? They're not game. They have all kinds of reasons why not, and I think every educator should be on the trading battle and trade live, or some version of it. So it starts with choosing a great team around you, how much life experience you have, and generally speaking, people who don't have much money, they often don't have that much life experience in dealing with people, choosing a great team to learn from. Secondly, if someone comes from a disadvantaged situation, I question their relationship with money. So we need to look at money mindset. There's so much money floating around in this world. And I think it was Paul Tudor Jones who, I think Tony Robbins shared that. Paul Tudor Jones said, in my mind, money is floating around the ether. All I need to do is open the tap and the money will flow. See, that's an abundance mindset. And a lot of people who have financial restrictions, they often, funny enough, also talk about not having enough time. And I believe that's a scarcity thinking. That's a mindset issue now that needs to be resolved, that an entrepreneur wouldn't have. Now, entrepreneurs, when you run a business, the dynamics are different because there's so many influencing factors. You can always blame someone else. In trading, it's always you. So that's a mindset shift for the entrepreneur, where they need to look at themselves and say, hey, maybe it's not the market, maybe it's not the Fed, maybe it's me. Whereas what I see with a lot of traders who come from a background where they're restricted with money and time, they often have a low self-worth, so a low self-image. So you can already see the differences. I'm generalizing here, of course.
I might have to disagree on the time issue a little bit. I see a lot of people who have businesses who want to get into trading, and the biggest issue they have is time. Like they have to, of course, run a business on the side. They have to learn trading at the same time and make it work. So both together is really tough. Not that they manage time as badly, but that they have a lot on their plate. In that case, now that pushes them more to take maybe shortcuts, try to find ways to do things faster that might not always work or be kind of good for them as traders. So that could be also a pretty big issue.
But it's the same for the guys from a disadvantaged background, because they're like, I hate my life so much. I'm craving this better life. And then they're pushing as well, and making a lot of unforced errors. Yeah, but from a different motivation, same pattern of behavior. You see, the thing is with the time, when you're an entrepreneur and you have, of course, time issues, right? We both know running a business is a big job. And the question is, and that's what you do so well, there's always a way to free up time. Always. I've got one guy, he runs his own business. He's like, I don't have time. He sends me emails so long, it takes me 10 minutes to read. Right? So there is an opportunity to structure. Write in bullet points. You don't need to write in full sentences. That saves you 5 minutes here and there. And he doesn't only do it with me, he would do it everywhere. Idle talk. How much do you work on increasing your energy so that you need to sleep less?